Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Hey, everybody. Welcome back to the Get Real Podcast. Ron Phillips here. Going to go back to the basics and talk about real estate today. Our country and, probably the world, but our country specifically is so used to buying assets, buying paper assets, that we don't even really think about it. We we invest in the stock market, we invest in bonds, we invest in mutual funds. We do all of this without thinking because that's just what everybody does. And that's because the people who sell those have massive marketing budgets, and they have, over the last many decades, they've had a pretty good campaign that tells people that's what they should do. And today I'm going to express why I believe real estate is the best investment. And with that said, it is not the best investment for everybody. So I want to be pretty clear up front that owning investment real estate is definitely not for everyone. So let me say up front who this is not for before I start talking about how awesome it is. It is awesome. But there's a lot of people who try to do it before they are financially ready to do it. So if you don't have enough capital saved and stored somewhere for your personal and family expenses for reserves, and if you own a business also for your business, and then enough capital to invest, you shouldn't be investing. And I don't care if you can do it creatively or not, because that means you don't have enough capital. Now, most people I find who have enough capital, they have that because they've been really wise with their money. And most people who are wise with their money also have great credit. They're able to get inexpensive debt. However, there are people out there who have some capital and don't have great credit. I also believe that if you're going to go out and seek debt, you should do that once you have everything together, including your credit. Now, those actually aren't the most important. I think listening to this right now, you're going, well, yeah, of course, Ron, you have to have capital, you have good credit, all of that stuff. The biggest one is that you need to be able to set aside a little bit of time to communicate with your professional property manager, whoever it is that is running your property for you. Now, if you're going to do this on your own, then you have to have even more time, because then you'll be doing it all on your own. But a lot of people think that, and they've bought the line that this is somehow just completely passive. It is much more passive having someone manage your property than not manage your property, but it is certainly not entirely passive, like owning a stock, for instance. So you do have to communicate with the person who's managing your property. But if you have enough time to do that, which is not that much time, literally it's sending emails and taking a couple of phone calls occasionally throughout the year, really not that big of a deal. However, we've had people who don't want to do that, and they do not make good owners of investment real estate. So definitely you need to do that. Let's get into why I think so. If you're listening and you think, okay, well, I check all the boxes, I have all of that, but why in the world would I want to invest in real estate when the stock market does pretty well? And for the last, 15 years, it's been doing remarkably well. Let me give you a couple of reasons. None of those stocks, unless you're Elon Musk and you just, bought Twitter, you don't own 100% of the investment. You own a micro share of that investment. But with real estate, the cool thing is when you buy it and you own it, you control it. Now, there's nothing, if you own Apple stock, there's literally nothing you can do to make Apple do something that makes the stock more money. You're 100% banking on the CEO of that company running it right and making the right decisions so that the stock goes up in value. However, with real estate, because you own 100% of it, you absolutely can affect the value of the property because you can make repairs to it, you can add additions to it. There's all kinds of things you can do that make a property more valuable than when you purchased it. And you have 100% control of it. Now, some people don't want control, and that's fine. That would be another reason why you would not want to do real estate investing. I love control, and most of the people that I know who want to invest in real estate, that's one of the things they're looking for. Now, you have control over it, and it produces the same type of yield as a stock. So let's talk about them just kind of apples to apples for a second. A stock appreciates in value and depreciates in value. You look at stock market charts and they go up and they go down. Sometimes they go up for a long time and then they come down, in a spike. But the stock market is a little bit volatile. Now, real estate is not as volatile as the stock market, but it also has appreciation and it can have depreciation. In other words, it can gain value and it can lose value, very similar to stocks. So, in that way, they're very similar. But here's the key difference: most stocks that are growth stocks do not produce a dividend or cash flow. And so you're looking for one or the other. In real estate, however, you get both. You get a high potential for growth and you get a great dividend or cash flow. But that's not the only reason why you would buy real estate. There's also incredible tax incentives to own it, which can offset or eliminate any taxes you would make or that you would pay on the cash flow gains or on the dividend gains, which doesn't exist on the stock market. And it can be purchased on payments over 30 years. Fixed rate debt, which is pretty interesting when you feel like there's a person living in that house, a resident living in that house. They're paying you rent every month. And after you pay all of your expenses, including your mortgage, you have extra cash left over. That's where you get your cash flow. And that payment is paying down the principal on your mortgage, which is also creating equity in your property. So you have a loan that someone else is paying off for you on fixed rate debt over 30 years. And the other really cool thing is that I don't know if you noticed this during the downturn of 2008. The stock market crash eliminated companies. Some really big companies just ceased to exist. They're no more. That really doesn't happen with real estate. Real estate doesn't go to zero. Now, if you think about it, you have a piece of land, a lot, you have a house on that lot. The house could burn to the ground, but it still doesn't make the real estate worth zero because the land is still there and the land is certainly not worth zero. So your investment is never going to be worth zero. And that's a really unique thing. The stock market can't say the same thing. There are plenty of companies who have gone out of business and they're just gone. Think AIG back in the day. And it's no more, right? It just went away. So very, very interesting. Now, let's go back to the whole house burning down thing. You can actually buy insurance and insure yourself against downside risk associated with a fire, for instance, lost rents, all kinds of things, which don't necessarily guarantee your investment, but it certainly hedges against anything that could happen to it in the fire scenario. It would just rebuild your property for you. And before you buy that piece of real estate, a third party is going to give you an independent valuation so that you can ensure you're not overpaying for it, which you don't get with stocks. You might be overpaying for it, and next week you'll find out that you overpaid for it when it crashes. But that's not what happens with real estate. There's these host of reasons why real estate is, in my opinion, the best investment, and it should be a part of most everyone's investment portfolio. I'm not saying you shouldn't invest in stocks. Not saying you shouldn't invest in bonds. I'm not saying any of that. I am saying, however, that most people should have investment real estate in their portfolios. And on the next episode, we'll talk about more the returns and how they work and why they are so powerful. So make sure you tune into next week when we talk about the returns of real estate. And as always, until next time, get out there and make something happen.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.